What's good investing all about? Let me put it in very simple terms for you. Yes, we want to see what has beaten, say, whatever benchmark you have. If it's the S&P 500 last year, then you want funds with low volatility, which have generated more than 25% per annum. Yes, you want to at least have a target of doubling your money over 5 years. If there's a tailwind, it might happen in 3. If there's a headwind, like a bear market or a Donald Trump, it might take 5 years. Okay. But the past doesn't guarantee the future. And you also want to make sure you don't panic, because panic and boredom are the two biggest threats to a quality investment and holding it for the right amount of time. You want to make sure you don't panic when the markets fall. So you want to make sure that you've gone through to check on your filters that how did they do when the market fell? Did they fall less than it in, say, 2022? Now, this is where it gets tricky, and this is the important bit. You want to make sure the volatility is as low as possible. Now, let me explain. The S&P 500 volatility is about 18% per annum, just to give you an idea, and its average over the last 15 years has been about 15% in sterling terms per annum return. So 15% return, 18% volatility. Reward 15, risk 18. Here, we're getting the same, but for low volatility. That's the goal. Okay, that's the engineering task. That is the Elon Musk of SpaceX rockets, sending them up there and being able to capture them. That's what we're after. Now, we're not guaranteed that in the future, but if we give it a long enough period of data, 5 years is pretty good, given that we've had 2 bear markets within that. Then we want the Sortino. Have they consistently had a good average return with low downside risk? When we look at those exchange-traded funds, and each of these can be in a SIP or an ISA, we look at those exchange-traded funds. That's our starting point to say to a client, right, what's your risk appetite? What's your persona? And do you want this low risk? Do you want those with a long enough period of time? Now, you can do that also with stocks, but you want to add a few more filters into stocks, and they tend to be a lot more volatile. So therefore, the more slightly higher risk end. But with exchange-traded funds, for the safer client, maybe somebody a bit older, looking at retiring, somebody who wants low risk, low volatility, or somebody who tried stocks and realized, hang on, that's a bit risky, not for me. Thank you. So anyway, follow for more content like this. You might even want to save this for knowing what the key principles and metrics are, but I'll do more videos like this. So do like and follow for more. Have a look at the links in the bio as well. Thank you all very much.